Hi bro, you good? Remember I'm just sharing the trading plan with you again. Same trading plan. Now we on Nas100, ne? So this is why okay, it's just gonna be a quick video. So on Nas100, this is what happened. Yesterday was 28, ne? Today is 29, like Friday. It's more like the last Friday of the year, ne? Actually, this is the last day of trading this year. It's the last day, ne? So this is what happened yesterday, ne? It was so yesterday like I caught this trade, ne? It's around remember, like it's from 8:30 here, from 8:30 to 11:30 was 11:30 there for indices, ne? Then the PM session is from, let's say, 1:30 to around 4:30 there, around 4:30 there. So that's the PM session, eh? So this is what happened yesterday with price, eh? Price was taken out here and then it went down, eh? During the session it broke here, like liquidity was taken here. That was around 8:30. After taking out liquidity, like broke market structure shift here according to the ICT 2022 mentorship strategy. And then price came back, ne? It hit this order block, ne? It came and respected this order block. So price was bearish yesterday, ne? Then from there it went down, it went deep into this fair value gap, ne? This fair value gap. So I was expecting like I didn't take this trade because I was expecting bullish prices. Then so when it came for this order block, like I said, my Fibonacci, remember, like my Fibonacci on Nas100 it's different again. It's more like the same with that one, with that zone, eh? But on Nas100 usually I use order blocks for entries and fair value gaps. So I didn't expect price to come for this order block there, to hit this, to target this order block. I didn't expect it. I thought it was just gonna come for this fair value gap, then midpoint the 62 level, eh? And start rallying up. But then instead it came, it triggered me in, eh, during the session. Then during lunch, then I noticed price was choppy. So what I did is I actually closed the trade, ne, early. So this is what happened. After rallying here, then I'm gonna remove this. Price came like for this order block, the order block that I showed you yesterday, ne? After doing that, this was outside the session, but it was about outside the session. Then it came for this like order block again, that small order block there again. Remember, yep, it came for that order block, then went up, ne? So I was expecting price today. This is what I was expecting. I was expecting price on Nas100 to continue going up, ne? But then this is what happened. I'm just gonna remove, like, take these and put them like into this. And this is 8:30 there, then 11:30, 11:30 there is 11:30. Yeah, I'm not gonna put the PM session. I'm just gonna put the AM session. So price rallied up, ne? This was London session. Then when price broke here, like I noticed, I was expecting when price was coming back here, I was expecting price probably to just respect this order block, ne? To just respect this order block and just continue going up, ne? But instead it created this, ne? Like it broke, we call it like a market structure shift. Here there was a market structure shift. So after seeing this, I noticed, ne, you know what, that's when like I went to our trading plan. So according to our trading plan, like we know the first thing that we do, like we have to know is the bias, ne? This was showing like bearishness. Then the time, ne, it was towards what, New York session, ne? So what do? The next thing is we wait for liquidity swipe and whatever. So here there was liquidity swipe already. I noticed it now. That means people from here were taken. Like here there was liquidity swipe here, ne? Liquidity was taken there. There was a liquidity swipe here. So here there was a liquidity swap. Also here there was a liquidity swap. Wherever you may. Then after the liquidity swap, I wait for what according to us. Liquidity swipe here or manipulation, it was during what it should be during London session. That's why I don't trade the London session, because I'll be waiting for more liquidity swipe during the session. If I don't see liquidity swipe during London session, I'm waiting for New York session to give me a liquidity swipe during the news. Then there was the market structure shift there, that was after, I think it was just towards the end of the London session. Actually it was after London session, like the London Qs one. Then my entry model from the 15 minutes, remember I'm on the 15 minutes there, in the 15 minutes time frame. So I use the Fibonacci and order block, especially on, so that when it comes to indices. So after liquidity was taken here, break of market structure here, a market structure shift here, it was broken here. So after seeing this, I knew there was a fair value gap was created. This fair value gap was created. I didn't take this trade. Mind you, I didn't take this trade. The reason why I didn't take this trade is because it's the last day of the year, and actually I did trade this week, but then I wasn't supposed to. I don't trade in December. We shouldn't be trading in December. It's a bad week, it's a bad month to trade. So after doing this, after creating this fair value gap, here there was a fair value gap created. I then knew this order block. It was now I knew this order block probably price was gonna come for this order block because of this because of this fair value gap. It's now the order block was now supported. Remember, every order block, in order to be a strong one, it has to be supported with the fair value gap. I'm just gonna be quick. So this is what I did. I could have done this. Actually, I was just watching price while I was playing games. So then you take up your fib. You could enter on the 62 level. This is the OTE, optimum trade entry point. But then I could have used, as for me, I was just going to use the one closest to the order block, which was more likely, I would also include spreads. So I would use the 70 level there. Why the 70 level? It's also a midpoint. If you notice the 70 level, it's more like the midpoint, close to the midpoint of the Fibonacci. And also this was a good setup. Then probably here would my first target. Then if we were to target 200 there, so it was a good setup there. If I remove the fib, so here the one close to the 70, I would put my limit here, my sell limit here, during this time, then waited for price to. So it was more like a 1:8 trade. I didn't take the trade. This is why I didn't take the trade, because it's December. That's the main reason. 2, it's the last day of December again, and it's a Friday, bruh. Then this is what you could have done again. You could just put your sell limit here, on the fair value gap. It's too fine, It's too fine. It was gonna be a 1:5 trade. Remember, most of our targets, even a 1:3 trade, it's good. It's too good. You'll be profitable with over time. So yeah, a quick review of our trading strategy there. So I'm just gonna say, if you notice, everything liquidity swipe, I'm just gonna say liquid wipe. Then those liquidity wipe, where is it? Here there was liquidity swipe. Where is it? I'm just gonna change color to white. Liquidity swipe here. Then what else? Here there was a market structure shift, a market structure shift here. This is what I would have done, a market structure shift. Then what? The fair value gap here. Fair value gap here. And then after the fair value gap, the order block here. The order block, actually it was supported by the fair value gap. Then what else? After that, I'm expecting price to just rally. So you could have just used especially when I'm trading indices, I use the fair value gap a lot. the midpoint of the fair value gap, ne? Then yeah, it was a good trade. I didn't take it, but then this was a good trade. Like, this is one of my setups when I'm trading with. Mind you, I'm on the 15-minute time frame. I didn't go lower, like on the 1 minute, whatever. I could have gone in the 1 minute, because here, let me just go on the 1 minute time frame. Eh? There is a setup again here. If maybe you're doubting the 15 minutes time frame, you go on the 1 minute time frame there. Remember, our entry was supposed to be like on the fair value gap. This is the 15-minute fair value gap. Then here price again, it came here, liquidity was taken. The same thing that happens again. Like, remember, price is fractal, but then I don't do that. I don't trade the lower time frames. So here liquidity, there was a market structure shift here. Then price came back here. Like, I would have done that, like gone to the 1 minute, because of low probability. Like, they wake out, but then I don't trade the 1 minute time frame. Ne? This is what happened on the 1 minute time frame. Price went down, then I did again, then rallied down. Don't trade the 1 minute. The 50 minutes, that's one of the rules. Our entry is always on the 50 minutes or 1 hour. Ne? If you check the 1 hour again, there was something on the 1 hour. The same thing happened on the 1 hour. I'm just gonna remove these. Okay, I'm gonna remove these again. Okay, so the same thing happened on the 1 hour. Ne? Okay, on the 1 hour now, there was a market structure shift here. If you check here, market structure shift, then there was a fair value gap here. I'm gonna remove this again, sorry. Then the fair value gap was somewhere here. I just want to clean prices now. Sorry. I hope it won't be long. Okay, there. Yep. Okay, there was a fair value gap there. You see, like on the 1 hour again, so like price was taken here, and then liquidity wipe here during the London session, then price broke. So if you get, these are high probability setups, bro. These are the ones that I wait for. These are the types of setups that I would look for, like if you want to grow your account, ne? So that's one of the lessons. I told you, do not trade like do not trade like on the 1 minute time frame. Avoid the smaller time frames, 1 minute, 5 minutes, avoid them. If you want to be profitable, be patient. We just want one setup a week, which pays maybe 1:5. 1:3 is enough. Just 1 week, you're risking 1% to get like 3%, then you're done for the week. Ne? Imagine maybe you have a $500 account, probably you'll be risking 5% of your account. If it's a personal account, maybe you're just putting $20 to get about 2 for 6 stay. It is enough, like for just a week if you're starting out. Ne? So yeah, I'm done, bruh.